Hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to my webinar. In this particular webinar, we will be focusing on how to trade the US NFP. Of course, as always, this will be a series of session where we'll be every single time, every single month, we will be covering the US NFP, and I will be going through a number of things during this webinar, which can certainly help you to make that informed decision, which matters the most, so that you can implement those strategies in your portfolio and, more importantly, in your trading plan. So hopefully everyone is doing well, and you guys are loving the volatility in the Forex market and, of course, in the equity markets as well. So let's begin, folks, and start looking at the slides. Just to ask you guys just a very small question. Are you guys, all of you can hear me and you guys can see my presentation? Please quickly say yes or no if you guys have if you can see. Okay, great. Perfect. That's all what I wanted to know. So please feel free to post questions as we go along, and I will be going through those questions and we'll try to answer as many as we can. Now, let me just quickly do some housekeeping. So with respect to that, anything which will be discussed in, let me go through the disclaimer and risk warning. So anything which will be discussed in this particular webinar cannot be perceived as an advice, folks. So if you are seeking for one, please do consult contacting your own financial advisors, who would be in a much better position to help you and guide you through that difficult moment. So what we are going to talk about, I will discuss the full agenda shortly, but in terms of contact details, so if you guys can please, you can follow me on Twitter and then ask me any question that you want. My Twitter handle is right in front of you over here, and I am fairly active on my Twitter, and I do reply to all the questions that you guys have, or anyone asks me those questions. And of course, the tweets, we also tweet, I tweet on AvaTrade's platform as well. So do follow both accounts and then see what exactly we are talking about on those accounts, because it is very important for you guys to stay informed. And with respect to our YouTube channel, it is called AvaTrade. On AvaTrade platform, I do 2 different videos on a daily basis. First of all, you have a daily fundamental videos in which I will cover the top fundamentals for the market on a daily basis. There's something which is really going to drive the market on that particular day. And on top of that, we also do technical analysis on various different derivatives. The derivatives that I choose, they are the most interesting ones for that particular day. And I go into details of all the entry and exit points and the potential pivot points for that particular derivative. So please feel free to follow us on our YouTube channel, and more importantly on Twitter, because it is very important for you guys to stay informed with all the breaking news and, more importantly, all the important levels. Now, what is on the agenda for today? We are going to discuss about the importance of the US NFP and why the US NFP is that important. Now, to answer that question, US NFP is the most important economic number for any particular day, right? For any particular economic data, because there's nothing important when it comes to economic numbers than US NFP. It is called the mother of all economic numbers because it sets the tone for trading for Forex, trading for equities, trading for fixed income, trading for volatility for volatility indices such as VIX. So it is very, very important for that. And then we will discuss what makes the US NFP reading. Like, what are the components of the US NFP reading? I will show all of that shortly. And then what instruments to trade. So why don't we look at the components and the instruments of those trades, and then we will go into the current state of the markets, of course, define the levels, and more importantly, defining a strategy, folks, giving you the strategy free, completely free, with all the track record for you guys to take back and then go and then have a look at that. So in terms of the Twitter accounts, just to go through this again, this is my Twitter account. You can see the handle over here, and you can see that these are the tweets that we are doing. That this particular tweet was talking about global easing in 2020. Where are the central banks with respect to their monetary policies and how active they are? You can see that this on this really nice graph done by Bloomberg. So really kind of give you that sort of information that you're really looking for. In terms of our YouTube channel, once again, it's called AvaTrade on YouTube. Here are all the videos that you need to see in terms of a technical analysis and fundamental analysis. Very, very important stuff. Now, let's begin by looking at the numbers, the economic numbers, and then see what exactly it means, right? So in terms of that, I go onto the website called Forex Factory. It is a pretty decent website. It gives you all the information with respect to that. Now, to answer our question, what makes the components of the US NFP? First of all, you got to look at the US as ISM manufacturing PMI number. They came on Monday, March the 2nd. The number came a little bit soft, still in the expansion territory, folks. It hasn't dropped below 50, because anything above is expansion, below is contraction. So that is okay. Little soft, but nothing to worry about. So that's okay. Now, obviously, the is FOMC statement and the federal fund rates. This was very, very interesting. We will go into that in a bit, because the Fed cut the interest rate by 50 basis points, and we made a large number of videos discussing about that and put articles on that as well, how to trade it and then what to do with respect to the entry and exit points for various different derivatives, right? And then on Wednesday, today, the second component of the US NFP, which really sets this tone for the US NFP data, is the US ADP non-farm employment change. The number came today, and of course, the coronavirus impact wasn't really prominent in the US, because the more influence of this is mainly in China, where factories are closed, supply chain is disrupted, new car numbers are down, industrial production numbers are down, CAGs in manufacturing services and PMI numbers, all of those numbers are extremely, extremely bad and rotten, so you can see. But when it comes to the US, ADP number was good, okay? ISM was little soft, not too bad. But if you look at the ISM non-manufacturing number for the US, which is again another important component, another important indicator for you guys to look for, the US non-farm payroll is the US ISM non-manufacturing PMI. It is pretty good. Now, going into tomorrow, obviously we don't have anything with respect to the US NFP. So tomorrow, let's just not focus on that too much in terms of the numbers. But hitting on Friday at 1:30 p.m. UK time, we're gonna get the average hourly earnings. So this is the direct component of the US NFP, because the market would trade mainly on the headline number, which is the non-farm employment change. It's supposed to come at, the forecast is for 175 against the 225. A number weaker than 175 would make the dollar weaker. And I will go into that just in a bit, what instruments to trade. But anything, a number which is below than 150, below 175, is going to make that number weak. But I suspect if that number is going to drop, I think the number is going to be pretty much on par in around this particular mark. So that will confirm that the monetary policy action by the Federal Reserve, where they cut the interest rate by 50 basis points, is okay. It's actually more than enough. They've used too much ammunition so far. There wasn't a need for that, but they've done it in order to soften the blow from coronavirus. That is the main reason. But if the number falls well below that, then that means prolonged period of loose monetary policy, dovish monetary policy by the Federal Reserve. So keep an eye on that. Then the second number where the market is also going to be focused on is the average hourly earnings, right? So it's supposed to come in at 0.3%, a slightly more stronger than the previous reading of 0.2%, right? Now, does that make sense so far, what we have discussed? Because it is important for you guys to understand what I have discussed so far so that we can continue. Guys, I just have a few people saying that they can, one person saying that he can't see the presentation, but no one else is complaining. So are you guys all okay with the presentation? Can you see my desktop and everything? All okay. Fantastic, Abdul Rahman. Thank you. Great, great, great. Okay. So far so good. Okay, great. Right. Let's continue now. Let's continue, go back to our presentation and see what exactly we are going on. Now, what instruments to trade with respect to this US non-farm payroll? We are focused on the number 3, the third question, right? In order for you to trade the US NFP, you can trade anything, my friends, because everything is prone to volatility. It is going to see higher volatility when the US NFP move. We are talking about G10 currency pairs. We are talking about global equity market, S&P, Dow, Nasdaq. These are the ones that you should be focused on more because they are very much related to the US NFP. The data is the US based. These equities are US based. So focus on that. What? S&P 500, Dow Jones, and Nasdaq. In terms of currency pairs, focus on euro dollar, focus on sterling dollar, focus on dollar yen, and of course Swiss franc and all of other pairs. But the major focus is euro dollar, sterling dollar, and the dollar yen. This is what we are really focused on, right? Now, let's continue with our discussion of the current state of market. Now, as you all of you guys know, right, that the Fed has been very, very active, folks, very, very active, right? They talked about the markets and they were concerned about what was really going on in the market. And we've seen massive monetary policy action by the Fed, which really took the market by surprise. The 50 basis point rate cut, which we experienced yesterday, no one was expecting that, but it provided that extra stimulus for the market, which market was really hoping for. Obviously, I believe, in my opinion, in my humble opinion, I think that the Fed has gone way out of their way, and then they have fired too much. We didn't really need the 50 basis point rate cut, because now the floodgate is open. We saw a similar similar monetary policy action from the Bank of Canada as well, who also cut the interest rate by 50 basis point per 50 basis point. So all over you could see that the monetary policy is really there from the central bank. All what we needed was from the central banks was pretty much just a coordinated action, do little bit, wait for them, save their bullets, and fire more when the economic numbers really start to fall. But that's their prerogative, and then see what the market is telling us. Now, in order to understand, before we go on to the bigger levels and defining them, in order to understand them, I just wanted to go through 3 major markets: S&P, Dow, and Nasdaq, and we will do 1 European market as well, right? What I'm seeing is right now, from this particular day, from 21st of February, we've seen this massive sell-off in the market. This sell-off was so intense. I mean, like, we were really talking about, in terms of a market, we were talking about more than 10% sell-off from its previous peak. Because if I measure the move from here all the way to if I start measuring the move from here all the way to here, you can see it was a 15%. Now we sit at 9%. just for the S&P 500 index. Imagine if you would have bought the market right here, as we discussed in our technical analysis video on our various different technical sessions, then you would have the opportunity to look at this one, because what I was focused on at that particular time, I was focused on this particular zone, and I was saying boom, 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 look at this particular area. It is crying out for the market that it is bound to reverse from here. If not from here, these two areas, this sort of this sort of area, this sort of area, this sort of area, all of that was pretty good opportunity. But now we got to measure the move with respect to the moving averages. What I have is 50-day smooth, 100-day smooth, and 200-day smooth. Now the opportunity for the market going into the US non-farm payroll is watch the market with respect to the 100-day and 100 and 200-day moving averages, because obviously the price is in battle with the 200-day moving average, and if it crosses above the moving average, 200-day moving average, guys, on a daily time frame, I'm speaking about everything. If it crosses above, that is your signal. Please, I think that would be really, really important for you guys to understand that when it comes to the equity market, focus on the 200-day moving average. If it falls below that, that is your sell signal. If it moves above that, that is possibly your buy signal, and keep the stops on the other side. Obviously, you know, if you're buying the if you're buying this equity on the buy side, the price moves above the 200-day moving average, put your stop below the previous low, and then let it run. But if the price drops below that, reverse your trade. Then you can possibly look for the trade to the downside, place your stop at the previous lower low, a lower high, sorry, right? So in this case, it would be right on top of that. But in case if the market continues to move higher tomorrow, and by some measure it moves above the 100-day moving average, fantastic. That is another opportunity. But I'm expecting for this market, I'm expecting this bounce. I'm calling this bounce dead cat bounce. I do not believe in the current strength in the market. I think it is prone to more weakness. It is going to see more weakness, and that is the likely trend from here onward. I really do not believe that the market is really going to continue to the upside. I think equity market is going to drop. I think more bad data is really going to be the influence, going to influence these equity markets. But the US, as far as for the US non-farm payroll, I think it doesn't really matter for this particular number. The Fed has already reduced the interest rate, and massively, so do not expect any sort of a weakness coming from the Fed side, because they've provided enormous amount of a stimulus with respect to the dovish monetary policy by reducing the interest rate. Okay, so that is the analysis for the S&P 500 index. Now, defining your resistance zone for the similar one, right? And then we will go through a little bit more quicker for the rest of them, because we don't have enough time, and I wanted to go through a strategy. I wanted to give out a strategy for you guys for S&P 500 index, so that you can go and trade perhaps based on that strategy, show you all the results. Now, in terms of a resistance, I'm looking at the previous support level. So your resistance zone is really starting from 3240 to 3208. So if you take this trade, if you have taken this trade from this particular support level, you're going to be looking at the price to go all the way to here. If you take the price, if you take the buy signal from based on the 200-day signal, 200-day smooth moving average, you place your stop behind the previous lower high, right? Lower high. Then you really looking at the price, you know, at these particular levels, and then take some sort of a profit right around the 100-day moving average. But let the trade run, because at that time the market is likely to continue to move higher, and the signal is going to come when the price breaks above the 100-day. If it stays above the 100-day, do not close your trade, let it run, just take some profit off, wait for the price to come in to have another war with the 50-day moving average. If it wanes, let it run, because then we are likely to go all the way to here. Okay, so that is your analysis for the S&P 500 index. Let's look at Nasdaq index, Nasdaq 100 stocks. The scenario is going to be very, 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 very similar. There we go. Now, Nasdaq is obviously a lot more stronger index as compared to the S&P 500 index. It is already giving me an indication that the prices are likely to move higher. It is stronger than the S&P 500 index, but obviously this is only 100 stock. S&P 500 is 500 stocks, but It shows that the price came into 200-day moving average, the one that we talked about, and the trader started to buy straight away. So that we went up. Now, obviously, you could trigger this trade if you wanted to. You can trigger this trade right now at this particular time, but and have your stop levels below this particular lower low, this low, right at this particular low, or below the 200-day moving average, and let the price run. Let this trade run. But if you haven't, then wait for the price to come into this one, and if the price crosses above that, then you can do it. In terms of levels, let's define them quickly before we move on to the next one. Let me fill out the so this was our level, which we talked about in our technical analysis, right? I'm talking about this particular spot zone, but I'm always more inclined to buy buy anything near the 200-day moving average. So this was pretty good. But if you were a conservative investor, then you should have considered for the price to come into this particular area. And let me show you. Let me move this one a little bit to this particular side and make it a bit more defined. I'm talking about this particular area of consolidation because this was in line with the 200-day moving average, so that the chances were higher. And then plus, once we engulfed this particular area of consolidation, the price retested this one, so there was a confirmation. But right now, our support area, if the price moves to the downside, then it is going to be in around here, right? Just over here. Let me just make it a little bit more smart. I'm looking at this particular area. So if the price stays in here, great. But if the price breaks below the 100-day moving average, you can, the bet is pretty much over, to be honest with you. I wouldn't even consider this area for support. I will wait for the price to come into this, or I will wait for I think 200-day would be much better bet than anything else. There is this particular area right there where the rally started. You can wait for the price to come here if the weakness is there. But, like I said, this is for traders who really like who like to do something, who are who like be more aggressive trading strategies. So it's mainly for those particular individuals, right? Now let me look into the Dow Jones, and then we move straight into the other strategy. I'm gonna pull out these Dow Jones index and go through this. Now, there you go. The Dow Jones index is the weakest index. We can clearly see that because it is below the 200-day moving average, of course, 150. And if the price if the price cannot break the 200-day moving average for the Dow Jones index, folks, your trade remains to the downside. If we get a test of a 200-day moving average but fails to break above that, that is your opportunity to short. Nasdaq is long. S&P could possibly be long, but Dow Jones is definitely a short by looking at the price action. And then you will just place your under those circumstances, you will place your stop right on top of this particular candle, right in this area, right? So between 27622, around this area, you will place your stop and you wait for the price to test this 200-day moving average. I mean, two indices are showing weaknesses. Nasdaq is the only one which is leading the market. Clearly tells me that, look, the market is more prone for weakness. Okay, now let's look at our beautiful strategy. But before we do that, let me just quickly look at some of the questions, if you guys have any over here, and if we can go through. Okay, so far so good, guys. Everyone is with me on it? Fantastic, fantastic. Okay, now the most exciting part, the strategy for the S&P 500 index for the US non-farm payrolls, folks, for the US non-farm payroll. Okay, remember to use this strategy on a 60-minute time frame only. Do not use this strategy on any other time frame. This is an intraday strategy I'm giving out to you guys for a 60-minute time frame, and it is only and only valid for the S&P 500 index. Do not use it on any other derivative, right? We are using exponential moving average with a period of 50. Now, all the red signs over here you see is your sell signal. All of these ones are your buy signals. I've done a back test over a period of 1 year, which is more than enough for an intraday strategy perspective, and it has produced a PNL of a 23% over a year. So we know the strategy works. We know the strategy is good. We know that we have losing trades on the long side, but which the number is 28 out of 44, and we know that we have losing trades on the short side. The number is 33 out of 45. We know that we have less winning trades in comparison to the losing trades. Similarly, we know that we have less winning trades on the short side and more losing trades on the short side. Overall, we have more losing trades than the winning trades. But despite all of that, because of strict and rigid discipline, we know that the strategy is profitable because the percent total P&L is 23%. Now, why is that? Why there is, this particular strategy is good? In order to understand it, here is the secret. Look at the average win. Average win under a portfolio of 100 million, that's where the back test is done. The average win was 1.95 million on the long side. Average lose in trade was 521,000. So this is literally more than 3-to-1 ratio. This is nearly 4-to-1 ratio, pretty much. Similarly, on the losing side, on the short side as well, my average loss was 363,000. My average win was 1.54 million. In total, my losing trades were losing on average of 436,000. My winning ratio was my winning trade on the all of winning trades, they were 1.77 million. That is the trick, guys. That is the trick. And my average duration of trade on a 60-minute time frame was for 20 bars. So 20 60-minute bar, that is my winning trades duration. Oh, sorry, my winning or losing trade duration. Now, does that make sense? Now is the time, folks, that if you wanted to fire any question in the last 4 minutes, now is the time that you guys pop out those questions, start asking me those questions. Now, can I have the value for the MA? The value for the exponential moving average is 50. Remember, again, I'm going to explain. Exponential moving average I am using on a 60-minute time frame. The value is 50. Tune into your MT4 platform. You can easily do that. What are the three moving averages, please? Yes, the three moving averages that I love all the time are 100, 1, 50, 2, 200, 3, and all of them are smooth moving averages. When I'm talking about the bigger, when I was talking about the markets and defining the levels and stuff, that has nothing to do with this particular strategy. I am showing you a strategy which is back tested by using the Bloomberg terminal, right? And it has all the nuggets and everything that you probably need with this particular strategy. And just do it on a 60-minute time frame. I've shown you the results for this strategy over a period of 1 year, which produced 23% profit over this period, which is really good. Okay, which is really good, because you don't really see this kind of a profit for most of these strategies. So the question is coming up, which says, when you do technical analysis, what time frames you use? I mean, like on our daily videos, we use daily. The videos that I produce on a daily basis, I do technical analysis on a daily time frame and also on an intraday time frame as well. So 30 minutes and 60 minutes. But for this particular strategy, I am speaking of 60-minute time frame. I'm really referring to 60-minute time frame. For, like I said to you, for more information, to learn more, please do follow, our Twitter account. Go over here, follow us, and ask me the strategies, ask me the questions that you really need to know, and I am more than happy to come back to you guys and then really tell you that, okay, folks, that this is what you really need to do with respect to this, and if it is really going to work, or if it's not really going to work, or what you should be looking at, how to clear the noise out of everything else, and really giving you that help and support that you really need. And of course, I do we have our YouTube videos on a daily basis. Okay, folks, so if with everything in mind, I wish you guys luck, and I hope that you guys will do well in the upcoming US NFP, and then you have learned from our technical analysis where we define the markets and everything else, the levels with that and the fundamentals, and hopefully the strategy that I have shared with you will come useful, and then you guys can really work on that. With that in mind, thank you so much for this person. Do you only use the MA to give signal? There is a yes, you would only use MA to use the signal. Delavine Pillay, the answer is yes. Okay, guys, folks, thank you so much, and see you guys next week in our next webinar. Don't forget to sign for that.